Coming up, simplest example for periodic inventory system, and we will be using first in first out method. You will learn how to calculate ending inventory cost, how to calculate cost of goods sold, how to calculate gross profit. Okay, we will start with example 1. Below is the inventory information from Syarikat Awani in April. Okay, given in the questions, the list of transaction, starting, beginning inventory, purchase and sales. Included in the information, the units involved and the price related. Okay, then the question asks you to calculate the ending inventory, cost of goods sold and gross profit using first in, first out method. First, we are going to answer the first requirement by the question. We are going to calculate ending inventory cost. The first step that we have to do is to calculate the ending inventory unit. And how to calculate the ending inventory unit? We will start with calculating, adding the beginning inventory and all the purchases related in the transaction given. Okay, for this question, the total of beginning inventory plus all the purchases related is 250 units. Later, we now to calculate the unit for sales. And in this question, we will total the 18 April and the 27 April of sales that will sum up to 140. So, getting the number 140, then please remember that just now we just calculated the total purchases and beginning inventory is 250. Now, we will minus 140 from 250 and you will get 110 units. That is the ending inventory for this question in terms of units. So later, the second step, we are going to value that amount, that unit involved in the questions. Understanding the concept of first in, first out, the first inventory that we have, the earliest inventory that we have, we must sell first. So, in this case, at the end of the day, the latest that we bought could be the ending inventory. So, consider we got already the 110 units. So, this is the ending inventory that we must consider from the latest purchases that we just purchased. So that could be, in this case is 20 April, 70 units, and we move to the previous purchase, that is 10 April, so that is 80 units. When in this case, for 10 April, we just consider 40 units to get the number 110 we just calculated. So this is the latest unit that we have. So we start with the number of 40 units with the cost RM 11 and 70 units with the cost of 12 ringgits. And the total for the both is 1,280. So this is the value of ending inventory. Okay, so now we move to the second requirement by the question is to calculate the cost of goods sold using the first in, first out method. In order to get this number, okay, now we are going to calculate for cost of goods sold for this question. We will start again with our list of transaction just now. Now focusing on the beginning inventory and all the purchases, we will calculate the total in RM Malaysia. So in this case, 100 times 10 ringgit, 80 times 11 ringgit, and 70 times 12 ringgit. And you will get the total of this one is 2,220. That what we call cost of good available for sale. So having this number, we will minus the number with value of ending inventory we just got from the calculation just now. Okay, so the total for this calculation is 1,440. So this is cost of goods sold. Okay, now we move to the next question. So the next question asking you to calculate gross profit. This one we refer back to our question just now. So now we focus with the sale value mentioned in the question. The total value of sale is 2,800. So what we have to do now is we minus the 2,800 with the cost of goods sold we just calculated. That number is 1,360. Okay, so this is all the answers that we just calculated in this tutorial, which is gross profit, RM 1,360, cost of goods sold 1,440, and value of ending inventory RM 1,280. Okay, that's all for now. Thank you for watching and learning.